and welcome. You're watching First Take here on News 9. I am Suyash Maheshwari and with me in the studio as always is Amit Ranjan. As always, we'll bring you the morning action on D Street. Also will be in focus the September quarter earnings of some major companies including Titan, Zomato and MRF that will come out later today. We'll get you the street's expectation on those. But before we do that, let's look at how equity markets around the world are doing. Positive cues coming in this morning from markets.
Thank you, Suyash. Positive cues and how everywhere. S&P 100 notched its best day since April this year. It was up 1.9% almost at 4,317.78. Dow Jones saw its best session since June, up 1.7%, and that was at, closed at 33,839.08. Nasdaq Composite posted its best day since July, rising 1.8%.
Wow.
And that was at 13,294.19. Now we move to the European markets. They also did well. Ended 1.6% higher. All sectors were in the positive territory. Nikkei, which is closed today, basically closed at 1.1% higher yesterday at 31,949.89. Hang Seng is up 2.07% today.
Wow.
And it stands, as we speak, it stands at 17,586.78. Now, along with this, I presume that as we were talking yesterday, the mood that the Fed rates have topped out is translating into the mood in the markets. Probably. Right. That's my gesticulation. Now, two big companies in the US.
Right, Apple and Starbucks. On the opposite sides of the spectrum, posted their results yesterday. Right.
I'll come to Apple first. Its revenues have dropped for the fourth straight quarter, and Apple is going through its worst slump in 22 years.
And why is that?
It's basically on the back of decreased demand in China.
Oh.
And while the iPhone demand has gone up, Mac is facing pressures or demand pressures.
They have not even launched a new Mac, if I'm not correct. If I'm not wrong.
They update the software constantly.
All right.
We both have
so
that.
So focus is not on laptop clearly.
On laptops clearly. But China, which was a major market, and what China has done, they have barred iPhone sales in some workplaces. That is one thing that has hurt Apple.
Right.
The other thing is Huawei is giving them fresh competition with very competitive phones in the China market.
Of course.
So the deceleration in China is worse than actually Apple had accounted for. So there will be a going back to the drawing board. I'll just come to the numbers briefly. Revenues fell to 89.5 billion this fiscal and ended 1% lower than the last quarter.
All right.
The street was expecting 89.4 billion estimate. Apple did enjoy 43.8 billion in iPhone revenue, and services revenues revenue from services drew 22.3 billion this quarter. Now, the China region, let's come to that. The revenues amounted to 15.1 billion, well short of the analyst expectations of 17 billion. So that is almost 2 billion less than what the analysts were expecting.
So degrowth on a quarter-on-quarter basis for the last 4 quarters?
Yes.
And how is Starbucks?
And just the stock. In anticipation, the stock had risen 2% ahead of the results.
So it came, I think, after the market hours. So only the stocks, the market will only get to react today.
But the stock has been up 32.5% this year. So despite
so 2023.
Yeah, 2023. Right. Despite all these downturns, Apple stock is basically on the rise, which is one of the factor terms of the stocks in the US markets. Coming to Starbucks, this has posted results stronger than expected. We have an Indian CEO there, Mr. Narasimhan, and I will just quote Mr. Lakshman Narasimhan, and I'll just start with a quote from him as he announced the results. As we enter the current year in the face of macro uncertainty, we remain confident in the momentum throughout our business and headroom globally. We expect sustained momentum throughout the company in the coming year, despite the uncertainty are the operative words.
And especially I think now that we are entering into the festive and the wedding season, so to say, the festive season drags I think till January in US markets and in global markets. So that
Christmas
will definitely help demand.
Big time. And analysts were predicting a 97% per share rise. The company's earnings have reported a $1.06 dollar per share earnings, not 97 cents. So it is more than what the analysts were expecting.
Right.
Revenue was posted at 9.38 billion for the quarter just ended. Global sales jumped 8%, driven by 4% rise in average consumer check and a 3% rise in transactions. Sales in North America jumped much more, 8%, and transactions rose 2%. So what analysts were expecting way ahead is what, and they are due to announce a new strategy in their marketing mix, which is yet to come. They had a meeting post their announcements yesterday. Let's anticipate what's happening, what's coming.
All right. I mean, I'm looking at the numbers. The market have definitely, at least the US markets and the European markets are on a strong footing. I was also looking at the future pricing, Amit. As you rightly mentioned, Apple results did come out after the market hours. So the market did not get time to react to the numbers. But I'm looking at the futures numbers. They are trading slightly lower. Dow, I think, is down 0.3%. Dow futures. S&P futures are down about 0.2% overall. But I mean, Apple being a heavyweight, I think it will have some sort of impact, but the overall market mood, from what I understand, is exuberant, given that it seems that interest rates for now have topped out, and I think that is a factor that is driving Asian markets as well. I'm also looking at some of the other cues that we have been tracking here on First Take. The bond yields, Amit, in the last couple of sessions since Fed decided to hold the interest rates, they have corrected by about 27 basis points, from 4.9% to about 4.63% now. Brent crude, on the other hand, which had declined, had softened from about $90 odd to about $85 in the last 5-6 sessions or so, has increased by about 1% or so overnight, and it's currently hovering around the $87 a barrel mark. Now this is Brent crude. The dollar index, on the other hand, is still holding on to that 106 sort of levels. Now coming back to Indian markets, a very strong markets for the opening for the Indian markets. We saw a gap up opening coming in for both Nifty and Sensex. I think Nifty opened above the 19,200 sort of levels and pretty much holding on to those gains. As you can see on your screen, as of 9:30 a.m. this morning, Nifty 50 was trading 0.64% higher and even above that 19,250 sort of levels that, at least what the experts are saying is going to be a resistance zone for the index going forward. Sensex is another one posting, trading with strong gains, up about almost over 400 points actually, above the 64,500 mark. The story continues, I think, in the broader markets. They have been rather resilient in the face of the downturn that we have seen play out in the last couple of weeks. Nifty Midcap 100 as of 9:30 a.m. this morning was up about 0.65%, above the 39,500 mark, whereas the Nifty Small Cap 100 was trading with gains of 1.2% and slowly inching towards that 13,000 sort of levels. What will augur well for the bulls as well is the decline in volatility index. India VIX as of 9:30 a.m. this morning was down 2.5% and is and is currently sitting at around 10.8, 10.9 sort of levels. Let's also look at how the sectors are doing. In the open, all sectors were trading in the green. Good amount of gains we have seen. As you can see on your screen now, these numbers are as of 9:30 a.m. this morning. Nifty Bank was up about 0.67% and in fact it has climbed above its 200-day simple moving average, which could be a trend reversal sort of levels for Nifty Bank going forward. And it's a crucial level because we have seen quite a bit of weakness set in the banking pack overall in the last couple of weeks or so. IT is another one. IT has built on to yesterday's gain. Nifty IT is up about 0.85%. Now this is again as of 9:30 a.m. this morning. Another sector that I can see, Amit, is trading in the green and with like good amount of profits is Nifty Metal, up almost 1%. PSU Bank is another one, up 0.76%. Realty continues to build onto the gains, up about 0.83% or so. Private bank is also up about 0.6% or so. But let's move on. We have got big earnings coming out today, and I think none is bigger than Titan, of course.
Yes, Titan is expected to post their earnings today, and as the market analysts are expecting, they are expecting net profits to see a marginal rise of 1.9% on an average, coming in at 889 crore as against 872.4 crore the same quarter last year. Revenues are expected to see a quantum quite a bit of jump. I would not say quantum, at 18.8% over the same quarter last year, coming in at 10,499 crores as against 8,837.5 crores the same quarter last year. Now the downer is the margins. There's pressure on the margins. They are expected to go down 178 basis points, coming in at 12.48% as against 14.46% last year.
And this, I'm assuming, is on the back of softening of commodity prices. I mean, actually, commodity prices going up. Gold is rescaling that $2,000 barrel mark.
Their jewelry, the jewelry segment is mostly in the studded jewelry.
Right.
They have their brand Caratline also. But the margins are being expected, one, because they started from a very huge base. And two, there has been a very high consumer activation cost and promotions that they have factored in. So that is why there has been a pressure on the margins. Now coming to the jewelry segment itself of Titan, which has been the driver, the segment is estimated to grow at 19% year on year. The company's gold exchange program and the consumer offers that are the ones that have helped Titan maintain the momentum in the jewelry segment. Gold, as you know, has topped out, so there is pressure from that side also. Caratline, as I said, which is Titan's diamond brand, is expected to grow as much as 45% year on year.
Wow. And I think this is despite diamond prices going down because of the war that we are seeing playing out in the Middle East.
Probably the demand has jumped.
Yeah, definitely. So basically,
much that it has evened it out, and it's going to go up 45%.
So price decline is being offset by volumes, is what I am understanding.
Yes. And the biggest driver of growth in the coming times, according to analysts, at least in the recent coming times, is going to be their eyewear segment, which is expected to grow 12% year on year now. And in the coming times also, that is going to be the biggest growth segment for Titan, according to what the analysts expect.
And I'm also looking at the stock this morning, Amit.
Yes.
It is up about 1.23% or so. But, compared to other jewelry makers, Titan has rather underperformed. When I'm looking at, with the returns of against Kalyan Jewelers, Vaibhav Global, Senco, in the last 1 month, Titan is up about 1% or so, whereas the median for the entire jewelry sector is of about 4.5%. In the last 6 months, Titan has given returns of about 17% whereas the jewelry pack, so to say, has given a return of about 31% or so. In 1 year, it has given returns of about 16%, whereas the pack is up about 21%. Also, I'm looking at the valuations, Amit. I think Titan is trading at a significant premium compared to other players in the industry. The industry average is of about 30, the PE, the forward price to earnings ratio, whereas for Titan, it's close to 90. So a significant premium, almost thrice it's trading at in terms of valuation.
The good thing is about Titan is, if you look at the stock, it's on an upward trajectory. Between the time you said and now, it is 1.27% up from 1.23%. So, and even on the last 5 days, it has been on an upward trajectory. So the anticipation to the results is definitely positive.
All right, that's a word from Amit. We also have Zomato. Zomato will come out with its September quarter results today. Now, the expectation is that revenue will jump almost 11%. This is on a quarter-on-quarter basis. Revenue is expected to come in at around 2,670 crores, whereas it stood at about 2,416 crores in the previous quarter of this financial year. EBITDA, which is earnings before interest, tax, depreciation and amortization, is expected to narrow from a loss of 48 crore in the previous quarter to about 6 crore in this quarter. And also I'm looking at the overall profitability figures. Let's talk about that a little bit. Profitability for Zomato is expected to improve from Q1 to Q2, but the profitability, I mean, it was on account of a adjustment because of adjustment of deferred tax. Loss before tax stood at around 15 crores. So the company operationally is still making losses. Now I'm also looking at other numbers for Zomato. Food delivery business, Amit, is expected to go up by about 15% on a year-on-year basis. Whereas on a quarter-on-quarter basis, it's expected to improve about 4%. Now, food delivery business, as we know, contributes to about 50% of the entire revenue for Zomato. Blinkit, which is a quick commerce platform, which contributes about 12.5 to 13% to its revenues, is expected to grow about 17% on a sequential basis and 68% on a year-on-year basis. And then we also know that there was a loyalty program which was launched during the past quarter. So now Zomato charges a platform fee also of around 3 to 4 rupees. And the stock also has done fairly well. I mean, yesterday it was up about 4%. This morning it's up about 4%. Year to date, it's up about almost 90%. So a clear outperformer in this year. But with that, let's also bring on our first guest on the show, Mr. Kush Bora of kushbora.com. Hi Kush, good morning. Appreciate you joining us here on First Take, sir. I want to begin by asking...
Guys. Yeah, my pleasure. Sorry, go ahead.
Yeah. So Nifty, I mean, yesterday we saw a range bound movement where Nifty was, trading in a range of about 100 to 110 odd points or so. It took support at 19,050 to 60 sort of levels. On the upside, faced resistance at 19,150. But today there was a clear breakout, and we are, I think, currently hovering in that 19,250 sort of levels, which was seen as a resistance level. How is the index looking on the price charts? What's your overall reading, sir?
So first up, look, the movement that we saw yesterday was also on account of the weekly expiry where, the 19,100, 19,200 call options had a very strong call base, and hence crossing those levels were a little difficult. Otherwise, if you see, the bias was positive, and it's an extremely encouraging sign that, we were trading, positively. Today, we've entered into that zone, which is, we call the congestion zone of 19,200 to 19,500, about 550. We spent a lot of time in this zone from August to September before we sort of broke out and went all the way to 20,200. So it's a good thing that, we've entered this zone, which means the near-term bottom somehow looks in place at 18,800. So unless there are, any adverse developments from the geopolitical front, I think this level should hold. We could perhaps trade in this range. This could very well be what, we've called in our today, this morning's advisory report as the pre-Diwali rally. Underway. I wouldn't be surprised if this extends to 19,500, 19,550 levels also. So we're in good stead. The healthy sign also comes from the Bank Nifty, which was facing resistance around the 200-day moving average for the past 5 to 6 sessions. Today there's a gap up and we're holding above that. So that's a good sign. The Bank Nifty. Yeah.
And what are the levels that you're tracking? As you rightly pointed out, we have moved above that 200-day simple moving average. Has the trend reversed? Because we have seen quite a bit of bearishness set in for the banking pack overall.
Well, look, let's just see why the banking pack is in a bit of a doldrum rather. Very simple reason. FII selling. FII has been one of the biggest holders of the banking stocks, especially the large names, which is your HDFC, ICICI, even the likes of SBI. So, once you see the FII outflows of such strong magnitude, it's going to be very difficult, despite the mix, I wouldn't say, a stellar performance, but the kind of mix set of numbers that we've seen, it'll not be a bad idea to perhaps watch this space a little cautiously and be a little selective. on the upside, since you asked for levels, I think the first level that we're looking at is 43,600, where the 20-day moving average resides. And once that is taken out, we could see a move, somewhere close to 44,300. So a very sharp short covering rally is also due, and a rebound is also due. My only concern is that this strong selling number from FII could perhaps keep the banking stocks and hence the banking index under a bit of pressure. The moment we see the FII selling figure reducing or them turning buyers, this index is all set to outperform.
Now, talking about FIIs, they sold, somewhere around $5 billion worth of equities in the last couple of months. But now that at least the narrative that is coming out from the global markets, that interest rates, at least for now, have topped out, do you expect FIIs to return? Because we are clearly seeing, bond yields soften over the course of the last couple of sessions. Dollar index has also pretty much holding on to that 106 sort of levels.
In my experience, this is always a very tricky thing to call, because there are a lot of factors at play when it comes to FII selling. If you just for a minute take out the global story and take out the geopolitical issues that are happening and the bond yields, the India story is still intact. So there's no reason per se domestically for FIIs to sell. Now, once these some of these global factors start to at least solidify or stabilize, there is every chance that the FIIs could come back. But as I said, it's just very difficult to pinpoint as to when will they turn around and to what magnitude. So while I'm hopeful that since the India story is intact and the global situation seems stabilizing, we could see a bit of a return of the FII money. But I wouldn't really pinpoint a time or a magnitude to it.
Hi Kush, Amit here. Now Tata Motors reported a very good set of results yesterday. Profits up 16%, revenues up 32% on the back of the Range Rover Sport and Defender accounting for almost 77% of their order book. But it was well short of the market expectations. The stock right now is up 2.91%. What do you think that market expectations, as they came short, would hurt the stock in the near term?
Or not, because the stock is definitely up.
It's definitely up, but do you think it is going to hurt because they came short of market expectations?
Sure. Hi, Amit. So my question was already answered, where if it were the case, then the stock would not actually be trading 2.5, almost 3 points up. We are off high slightly, but again, not by much. I'll tell you, even in the recent past, we've maintained that the 620, 625 level is a very strong support zone. Markets do kind of have an anticipation of what the numbers are going to be like, and hence you did not see the stock break down below the 625 level. Now, even though as you say, there's a miss on certain factors, it should have translated into price action. It's not. Also, I think it's getting the rub off of the entire auto space. That the kind of traction that it's seeing on the upside. So Maruti, TVS Motor, Bajaj Auto, Tata Motors, these are some of the stocks that have actually done well, and I think will continue to do well. So from my perspective, as long as the 625 level is held, the stock should actually see some more upside from here. Won't be surprised to see 700 also on this stock maybe in the near term as well.
Now, Kush, Adani Enterprises was another one which reported its September quarter numbers. The numbers were rather hard at least for me to comprehend. I saw, like, if you see, net profit is down, 50% on a year-on-year basis. EBITDA margins are seen improving. First of all, how are you even reading these numbers? And, given that the stock has corrected significantly, even yesterday, I think we saw, it correct. It was among the top gainers, up about 3% or so, gave up all its gains by the end of the session. But today, I think it's up about, 1 or 2% or so, actually 2.5% this morning. Is the earnings going to play a factor in the stock prices because the business model is so complicated, or is the street looking beyond that?
So thankfully for me, I don't really delve so much into the numbers. Coming from a technical standpoint, what I'm looking at is that the stock's clearly under pressure. Ever since it hit the 2700 high somewhere end of August, it's been on the downturn. The bounce that we are seeing today is more of a technical bounce. The stock had gone into an oversold territory around the 2200 level, but from there on, if you see, it's not even crossing its 20-day 200-day moving average, which resides somewhere close to 20 to 80 levels. So I think the stock will continue to be under pressure. And if I'll talk about the entire pack or the entire group per se, the only two stocks that we really like here are first Adani Power and then second Adani Ports. So Adani Enterprises does not really even fall on my radar. I mean, the price action itself is very clear for me to sort of put an avoid on this. What I would be concerned about is the 2200 level being held. If that is broken out, the stock could actually slip below, and go down as low as perhaps even 2050 kind of levels. So for me, this is a very clear avoid at the moment. I would actually focus on Adani Power if I were to pick something from this table.
Now, Kush, as we are in the thick of the earnings season, another big company that will come out with its results is MRF. I'll come to you on the expectations on the stock later. But Amit, what's the street expecting with MRF?
Well, in anticipation, the stock today is up 0.31% already, and it is on an upward downward trajectory. But in the last 5 days, if you look, it is on an upward. So anticipation is good, and the car market has done very well. So the street is expecting a higher revenue than 5,826.3 crores that they recorded the same quarter last year, a gross profit of 1,748.7 that they recorded gross. So it is going to be quite a bit of jump from that because this industry has done very well.
All right.
Kush, what are your views on this?
I mean, the stock has been an underperformer compared to, other tire players. As I can see, MRF is on a 6-month basis, it's up about 12%, whereas other industry players are up somewhere from 15 to 20%. 1 year basis, it's up around 20%. Others are up 30 to 40%. India's costliest stock, so to say. What are your expectations there, sir?
Well, I think that could perhaps be one of the factors, playing on the stock. The fact that, there is very little float and very little participation is also one of the factors that is playing on the stock. And look, from my perspective, I think the stock is close to its resistance levels. The bias, however, has just turned positively only recently, and it's not, as you rightly said, not performed as well as the other, tire manufacturers. My suggestion would be, just keep it on your avoid list. If you've got a position somehow, early in the day, then perhaps, hold it with a trailing stop loss. But otherwise, I'd say there are, a lot of other players which have, much better momentum going for them. The likes of Apollo Tires, JK Tires for that matter. So, those would be my, picks. The stock's actually gone into a consolidation mode. Hasn't been able to take out the 11,100, 1,11,300 kind of levels recently. So I think I'd actually not really focus too much on this one right now. For me, JK Tire, Apollo Tires, these would perhaps make the cut.
Okay, Kush, now could you give us your top 5 picks for the day, for the markets?
Sure thing. Maybe not 5, but surely a couple of them. The first stock that I have on my radar is Alchem Labs. The stock's actually seen a very smart rebound from the 3,500 level and has gained, in terms of volume, delivery, and price action also. So this was something that we recommended today to our clients in our advisory service also. 3875, 3950 are the two levels that I'm looking at. On the downside, 3700 is where the support zone is. The stock's already about 1% up, but we think this momentum could continue further. One more stock that is on our radar is Manyavar, Vedant Fashions. The stock's actually not seen too much of price action for the last 4 or 5 days. But interestingly, there is a very clear markup in the delivery and the volumes. So this is a very clear indication that the stock is forming a base and all set to move higher from here. So if someone wants to accumulate this stock at the start of the rally, this is perhaps a good entry point. On the upside, 1335, 1320 are the levels that we're looking at on Manyavar, Vedant Fashions. 1275 is where I would place my stop loss. A couple of other names on my radar. CDSL. This stock has been doing very well, has seen a lot of momentum, but continues to surprise on the upside. And when the stock's been up, the volume and the price actions have also been fantastic. So I think this momentum could continue. 1560, 1600 are the levels that we're looking at on the upside. 1480 is where I would place my stop loss. And one stock that we recently added as a part of our advisory service is Cyient. Strong base formation at 1600, positive bias here. The momentum could perhaps be a little more, but the fact that it's very close to its 20 and its 50-day moving average is perhaps why you don't see as a bigger momentum here. But once the 1680 level is taken out, the stock could make a dash towards 1710 and 1750 levels. 1640 is where I would place my stop loss. So these are some of the stocks that I have on my radar. And as I said, we've discussed these stocks as a part of our advisory service with our clients as well.
All right, that's the view coming in from Kush Bora. Kush, always a pleasure speaking to you, sir. Appreciate you joining us here on First Take.
Thank you.
Pleasure's all mine. Thank you so much and have a great weekend ahead.
Let's also look at how the market is doing. I mean, Nifty, Amit, is holding on to that 19,250 sort of levels. Actually, we are above those 19,250 mark, up about 0.67%. If you can play up those graphics that how the markets are doing. Nifty up about 0.69%, holding above that 19,250 mark at 19,265 sort of levels. Sensex on the other hand is up about 0.63%, above, closely actually closing in on that 64,500 mark. The broader markets remain buoyant. Nifty Midcap 100 as of 10:10 a.m. this morning is up 0.77%, and the Small Cap 100 index is holding on to those gains of about 1.3%. Volatility is also declining. It's down about 2.75%. Now these numbers are of course as of 10:10 a.m. as you can see on your screen, and India VIX currently sits at about 10.7 sort of levels. But with that, we have completely run out of time on this edition of First Take. Keep watching News 9.